Welcome everyone. My name is Matthew Ponder. I am a IUL specialist at Life Course Financial, and today is a very special topic that I'm very excited to share with you. We're going to talk about whether using an IUL conversion or Roth conversion. See, an IUL or a Roth conversion. And the reason I'm doing this conversion analysis with you is because when you have qualified funds, tax deferred accounts, 401k, IRA, 403b, 457 plan, if you're about to retire and you want to move your employer sponsored account into your own IRA, or if you're changing jobs, usually people do not leave their plan, their retirement plan with their employer if they change jobs or if they retire. Hence, they move it into an IRA. So we're going to talk about option or choice for you to either use an IUL conversion or a Roth conversion to turn your tax deferred retirement account into tax-free income, because we all know a Roth is tax-free and so is an IUL, and we're going to do a comparison on each of those. So let's go and get started. All right, so we're going to look at the strengths and we are going to look at the weaknesses, the strengths and the weaknesses of the Roth IRA and the IUL. Now let's look at the IRA first. A Roth IRA. Now, there's only two big benefits using a Roth IRA when converting your tax-deferred income into tax-free income, and that is it does accumulate tax-free forever, and when you're ready to take out income from your Roth IRA, it will come out in the form of tax-free income, tax-free distributions. And also, there's a strategy called a backdoor Roth strategy, and there's a mega backdoor Roth strategy. Now, these two strategies are in place as a loophole for high income earners. Now, recently, there were proposed changes for retirement accounts. Now, these two strategies here, the backdoor and the mega, this means that after-tax amounts in retirement accounts will no longer be eligible for conversion to Roth accounts as of January 1st, 2022, which means the backdoor Roth and the mega backdoor Roth are no longer eligible for people to convert their after-tax amounts into the Roth IRA account. IRAs and Roth IRAs face the second round of jeopardy after taking the Secure Act in 2020. So there was in 2020, there was a law that was passed called the Secure Act. And that took away the backdoor Roth strategy and the mega backdoor Roth strategy. Now, this means that high income earners, those who make over $140,000 a year, they can no longer use the backdoor Roth strategy or the mega backdoor Roth strategy because there are yearly savings caps to put into a Roth IRA, and I'm going to show you that next. Strengths of IUL conversion. Now, what is an IUL? An IUL is indexed universal life insurance, okay? That's what IUL stands for. Universal life, IUL. Now, it has the same benefits. It has the accumulation of tax-free income. When you're ready to take income for retirement, for your business, for college, for your children, for any financial reason, you do have tax-free distributions as well. So these two comparisons do match the Roth IRA. But here's one thing the IUL does provide is you can take your IRA or your Roth IRA and you can convert that into the IUL, and there's no expiration date. Same thing if you have a Roth 401k or a 401k, you can convert those accounts as well into the IUL, and there's no expiration date. So right now, this IUL is under a tax code. It's not particularly a product, it's a tax code. That's the biggest thing that I want you to understand, that an IUL falls, or life insurance itself, life insurance is a single biggest benefit in the tax code, which falls under Section 7702 of the United States tax code. Okay, it's not a product, it's a tax code that we want to make sure our money has the most advantageous benefits to our money. So these are the 4 strengths of an IUL conversion. Weaknesses of having a Roth IRA. Now, when you're converting your tax deferred income and you wanted to defer that into tax free, you do have to pay taxes upon your conversion. So let's say if you have $100,000 of tax deferred qualified income, you do have to pay, and you're at a 25% tax bracket. That means that you're going to have to pay or set aside 25% or $25,000, meaning if you start with 100K, let me write up here. So if you have $100,000 that you want to convert into a Roth, you do have to pay taxes upon your conversion, meaning only $75,000 is going to go inside the Roth, and it's going to accumulate tax-free, and your distributions are tax-free. And this $75,000 is minus the 25 grand, or at a 25% tax bracket, for example. Secondly, you are invested in stocks, bonds, and mutual funds. Okay, even though it's accumulating and distributions are tax-free, that is the Roth side, but you still are invested in stocks, bonds, and mutual funds because it's still an IRA. So you're still going to experience market volatility. Now, for estate planning, if you pass this Roth IRA account to heirs, remember the Secure Act that I mentioned previously? There is a new law under the Secure Act that passed in 2020, and this affects estate planning. Now, your heirs, when they inherit a Roth IRA account, the IRA side of the IRA must liquidate the Roth within 10 years. Now, that's a major bummer because all that tax-free income your heirs have inherited, they have to get rid of that within 10 years. Plus, there are RMD taxes that your heirs do have to pay. Okay, so RMDs are required minimal distributions. Okay, RMD is required minimum distributions. That's because you still have the IRA, you're still holding an IRA, meaning there's still taxes due, even though it's a Roth account. Okay, and then next, you have to be 59 and a half in order to access or disperse or take both your contributions that you put in over time plus any earnings. You have to be 59 and a half in order to get both your contributions and your tax-free earnings. Okay, so there's an age limit in order to get your funds. I'm going to jump down. Let me go to the right. And next, when your income is over $140,000 a year, or if you get to that point and your income increases over 140 grand a year, your contributions stop. So you can no longer contribute into your Roth IRA if your annual income is over or greater than $140,000 a year. Hence, the backdoor Roth strategy. That was a loophole for those to continue to put money into a Roth IRA because their income exceeded the $140,000 a year. Now, another weakness of a Roth IRA is that you have to wait 5 years to take tax-free earnings. Now, this is the gain into your Roth IRA. You have to wait 5 years in order to take your tax-free earnings. And it doesn't matter if you're 59 and a half, you still have to wait 5 years in order to take that. Now, if you are under 140 grand a year, just generally speaking, if you're under age 50, you have a cap or a yearly savings cap of how much you can put into this type of account. It's only $6,000 a year. Or if you're over 50, age 50, you can put $7,000 a year. Now, these are caps. These are limitations of how much you can put in, and that's not going to, and let's do some quick math. If you're under age 50, you can only put $6,000 a year, and I'm going to put times 20 years. That's only $120,000 in 20 years, and that's not enough income to put in, and that's not really going to change, your circumstances. It's not a big wow. Okay, so there's yearly caps on how much you can put into this account. Now let's look at the strengths. This is a continuation of an IUL conversion. First, there are no taxes due upon conversion. So the $100,000 example I mentioned, and you want to put into an IUL, the full amount of that 100 grand is going into the IUL. There are no taxes due. There are no tax withholdings. Okay, that is awesome. So you can save that extra 25 grand that would go into in taxes if you use the Roth IRA. But if you use the IUL conversion, you are going to get that full amount inside this account. Also, you are not invested in the market. You are not directly invested in the market. You are going to get your gains in this IUL, and I'm going to show you how you're going to participate in the market without being fully invested in the market. And it's a unique feature that an IUL policy does have that a Roth IRA cannot do. For estate planning, there is no 10-year rule, so which means your heirs do not have to liquidate their IUL within 10 years. Okay, this is safe. All of the legislative changes that have been going on, the section 7702 that I mentioned under life insurance, it was unaffected. It was actually improved. It was actually untouched. Okay, there's no 10-year rule for your heirs. There is no taxes due for your heirs. Your heirs do not owe any RMD taxes. There is no age limit in order to access your income. There's no income limit. Okay, you can earn whatever income you earn in your career or your job. There's no income limit of how much you can put into this into an IUL. And also, when it comes to liquidity, it's liquid after year one, and I'll get to how much or how that would work for you. Okay. And also, there's no yearly savings cap. Okay, there's no $6,000 a year cap or $7,000 a year cap. It's all up to you how much you can afford to put into this. All right, so there's no yearly savings cap. The IUL conversion accomplishes the same goal as the Roth IRA, but it has much more tax efficiency with far greater flexibility for tax-free withdrawals at younger ages. All right, I'm going to say that one more time. The IUL accomplishes the same goal as the Roth IRA, but has much more tax efficiency and with far greater flexibility for tax-free withdrawals at younger ages. Life insurance as the new Roth IRA. Now let's take a look at that. Let's look at the unique features of the IUL conversion that can provide the liquidity you may need later in life and the protection you need now. If you're age 45 through 85, there are two funding options for the conversion. You can convert your qualified account or your qualified balance over 5 years if you're age 45 to 85, or you can do a 10 pay if your age is 45 through 80, meaning you can convert or spread your taxes over a 10-year period. So these are two premium payment options, and the minimum amount to start is $25,000. Your account balance will never be reduced due to poor market performance alone. As a unique feature of the IUL, you have 4 interest options that give you the advantage of selecting one or any combination of all 4 interest options. These 4 options are available simultaneously. Okay, so let's look at number 1. There are 4 interest indexing options, meaning growth. So you can get the earnings of the growth of the stock market. Okay, there are 4 interest options or 4 strategies that you can choose from. You can select one, or you can select a combination, and we can run those numbers to see what the numbers would. We can run the numbers and see what the differences will be, and you can choose which ones you would like. And there are 4 specific dates during each calendar year, which gives you the flexibility to adjust your strategy. So there are 4 specific dates each calendar year, and you can choose which ones you want to adjust, because since no one knows for sure what tomorrow will bring, on 4 specific dates during each calendar year, you have the flexibility to adjust your interest strategy. And number 4, the credited rate will never be less than 0. All right, it will never be less than 0 because there's a floor. All right, that's your protection. I'm going to show you what that looks like and how it works. Now let's talk more about liquidity. You have each year after the first year, you can withdraw 10% penalty free each policy year after year 1. Or perhaps if you want more income for whatever reason, you may obtain a loan using the cash value in your account if you want a higher amount. You are not required to repay it back in your lifetime. It'll be paid back from the death benefit. Now that's the beauty of an IUL, because the great thing is you're not required to repay back the loan. If you want, let's say, if you put $100,000 in and over 10, and because you want it to bake. You want it to bake for a good amount of time, 5-10 years, before you start pulling large amounts out. But when that time comes and you want to take a loan out, $20,000, $10,000, $30,000, whatever it may be, you do not have to pay it back in your lifetime, because it will be paid back from the death benefit. But you always have the choice of repaying it back if you so wish to do that, to add to your accumulation, if you want more income in the future, or for a bigger financial legacy for your heirs. Okay, so that's liquidity. You get 10% a year after year 1. You have loans that you can borrow against your policy, and that's the smart way to do it. You do not have to repay it back, but you do have the option of repayment, but that's an option. Now, in IUL, there are many IUL products or IUL strategies. This particular one that I'm showing you is an IUL conversion. Now, this has additional benefits and riders that are added to your life plan for no additional cost of insurance. So let's look at what those benefits are that come along for the ride. Now let's look at these benefits and the riders that are added to your life plan that are only unique to the IUL. We're going to take a look at the blue box here. This is the living benefit rider. It's also known as the accelerated benefits rider. Now it's important to know that life insurance is called life insurance because it gives you protection during your life and it gives you benefits during your life. These benefits are available to you while you're living. It's not death insurance. It's only term insurance that only works when somebody passes. I only offer and I only give and provide living benefits. So you can use this plan while you're still living, while you're living. That's the difference. The living benefit rider will automatically be added to the policy if approved, and I'll show you how. There's no additional cost of insurance for the living benefit rider. This rider provides an advance of the death benefit to the policy owner if the insured is terminally ill. Now, secondly, we're going to look at the purple, which is the paid up rider. The paid up rider will automatically be added to the policy if approved. There's no additional cost of insurance for the paid up rider. This rider will prevent the policy from lapsing due to the loan balance exceeding the account balance. Okay? You have two balances in your policy. You have a loan balance and you have an account balance. If you take out tax-free income and that loan exceeds your current account balance, usually your policy will lapse because you're taking more out than what you have in there. But since this financial tool has a paid up rider, it's going to prevent your policy from lapsing. Now, thirdly, this is the one holy grail, is your tax advantages. Okay, this is what I love about this. The cash value in your policy accumulates income tax deferred, subject to certain conditions. Withdrawals and loans may be taken on the policy without incurring income taxes as long, okay, that's key, as long as your policy remains in force and results in life insurance death benefit. So as long as you do not cancel your policy and you have a death benefit attached to your policy, you can take out loans income tax free. And of course, you're going to have an annual report provided to you. This report will show the current amount of insurance, your account balance, your cash value, your loan balance of the policy. It will also show your premiums paid, your partial surrenders, which means your 10% a year that you can take out penalty free, the liquidity that I showed you, and charges made on the policy since the last report. So each year it's going to make its updates. The IUL Conversion is a life insurance solution offering guaranteed, okay? Guaranteed is a strong word, and I'll show you why it's guaranteed. Guaranteed protection with the flexibility to fit your own needs. You're going to have more choices and more control over this account. It's better than a Roth IRA. Now let's look more into this here. Life insurance is the main ingredient and the heart when planning for your financial needs. If you're looking for an affordable, permanent protection with strong cash accumulation potential, and at the same time having the choice to use this accumulation for financial needs or cash flow at a later date, you are not alone. In today's environment, many consumers are looking for the safety of insurance protection with the comfort of knowing their policy has liquidity in the event of an unexpected need or to supplement their retirement years. This is a great way to diversify your portfolio. The IUL Conversion offers protection with solutions to meet the needs you may face in the future. You no longer have to be faced with the difficult choice of purchasing the security and protection of a fixed interest vehicle, which may offer low interest rates, or choosing the growth potential of a variable product, but then having to live with the inherent volatility. Now we know what fixed interest looks like, right? Our CDs and our bank accounts, our savings, our checking accounts. We know what that looks like. We have a certain amount, but it dwindles down because of low interest environment. And that's what we are in today. We are in a very low interest rate environment. And we also know what market volatility is, our variable products are, our stocks, our bonds, anything that's connected to the stock market. And we're always trying to react when it's going up and down. See, we're always trying to fix it however we can, but we're just reacting, and he's trying to pull it back up. We do not want to be in that position, especially if if you want to get if you do not want to be in that position anymore. Either you're still working or you're retired. You do not want to be in that circumstance anymore. If there's a better option, and this is what I'm showing you now. Now, this is awesome. This is what the growth potential of an IUL has, and it's called the power of indexing. Today, financial tools such as an IUL are combined with unique methods of crediting interest. Remember when I mentioned you have 4 interest crediting options to choose from? This is what I mean. You have 4 strategies to choose from that are connected to the power of indexing. Now, what I'm showing you is over the last century, from 2000 through 2020. Now, when we look at the year 2000, the year 2001, 02, 08, and let's say 18, and 2021 is not listed, but I'm going to put that here as well because of what happened over March of 2020 when the pandemic hit, because the market did tank as well in 2020. Now, these specific years are years that hurt, that were unbearable, that were not comfortable, right? Because this is your retirement income, whether it was with your employer, which usually it is, or if you had a Roth IRA, your 401k, your 403b. During these times of the last decade, 2 decades, you wish that you didn't experience that, right? Because you were looking for security, you were looking for safety, but you are in the market, so you were heavily affected. Now, the IUL conversion is a flexible premium universal life insurance policy that combines the features of a traditional fixed product with the potential of having credited interest linked to the S&P 500, which I'm showing you now. Now, as you look, the red line represents the stock market, the volatile market, and the green line represents the IUL, okay? Now, at the turn of the century at the dot-com bubble burst, everyone was excited to go into a new millennia, and so we started with 2000, but it did crash because of the dot-com bubble burst. So the first 3 years, the market tanked, but as you see, the green line holds. It's at a 0%. Remember that your account balance will never fall less than 0 if you have an IUL. It hits 0%, right? So you have a floor protection. You're not going to earn, right? Because you're not earning the first 3 years, but you are protected from market losses. So all of your previous, your previous balance was protected. Now, when 2003 came, people were coming out of the water. You know, they're trying to get their breath back. And IUL, it's crediting in the up years. Now, when 2008 came, it fell again. If you're in the market, it fell 37%. With the IUL, it credited, but it also held. Actually, it credited prior to 08, but when 08 came, again, as you see here, it protected you with a 0% floor. And the great thing about an IUL is that all your gains in the previous year are kept. So when the market tanked in 08, all your interest earnings over the previous years, over the past 7 years, were kept safe. And then when 09 came, all your previous credited interest plus your original capital or your original premium, all of that is all gaining more interest, okay? So as you see, the IUL, it protects you from market losses because of the 0% floor, and it only participates in the growth of the market. That is the key of indexing. And so when time went on after '08, the market was, trying to come back up. As you see, it's just moving a little weird. And, when 2001 came, I'm sorry, when 2020 came, I should actually erase that because 2020 was the coronavirus, excuse me, not 2021. But as you see, when 2020 came, the pandemic, it did fall of March. But as you see, IUL kept its own because the power of indexing. That is what you're going to have when you do an IUL conversion. You're going to be protected from volatile corrections, crashes, all the weird stuff, all the volatile things that you do not want to put yourself in. You're going to be protected because of that 0% floor, and it's only going to participate in the market itself. You're not directly in the market. The IUL indexing uses the S&P 500 as a barometer of indexing. So I hope that makes sense. Now let's talk about how the funding works. So when you're ready to do a conversion of your qualified account, your tax deferred account, and you want to do a IUL conversion, this is what I love about this strategy is because you're going to have the ability to spread your taxes or any of your capital gains over a 10-year period, and that's going to go into tax-free cash. So you're going to spread your taxes or your gains over a 10-year period into tax-free cash. I know I said there's a 5-year and a 10-year strategy, but I like the 10-year strategy period better, and we can talk about that in your appointment. Now let's look at how this IUL strategy is built out. First, let's look at A. The IUL conversion in this particular financial tool is an annuity and a life insurance product. It's a 2-in-1 design. It has one main goal in mind: to spread your taxes or your capital gains over a 10-year period. Now let's look at C. How it works is on an annual or every year annually, there's an annual premium that comes from the annuity side and it pays into the life insurance side or the tax-free side, and it happens automatically. All right, so if you start with $100,000 and you put it into this IUL conversion, every year it's going to take out a portion, let's say $19,000. Every year, 19 grand is going to come out every year, and I'm just hypothetically speaking, and it's going to pay from the annuity side, and it's going to pay into the life insurance side. That's how it works, and it happens automatically within the design. You don't have to do anything every year. I don't have to do anything every year. It happens because that's how it's designed. Now, it works wonderfully if you use non-qualified annuities. So if you have gains in your non-qualified annuity, or as I mentioned previously, if you have qualified accounts, both types of this money, non-qualified money or qualified funds, work perfectly for this strategy. And since no one knows what the future will bring, the IUL conversion will give you the protection to meet unexpected demands and the peace of mind of an opportunity of continued liquidity. Now, you're going to have an account balance when you do a IUL conversion. You will have the opportunity to accumulate an account balance where the credited interest is linked in part to the S&P 500 index, which excludes dividends, and to experience what many of us are looking for as we plan for our financial future. That is the possibility of benefiting from market increases without being fully subjected to the risk of market decreases. You only have one lifetime to make this happen, and you should not have to worry of risking it all. Sooner or later, everyone reaches that time in life when working 24/7 is no longer an option, or you just don't want to work so much anymore. Now, I want to know what your goals are. When you book a time with me, you're going to do an intake form. And whether it's a cabin in the woods, you want a summer home, world travel, or you just want a worry-free, comfortable life, you're going to need continued income to fulfill your dreams. But at the same time, you must remember that you are not indestructible and will want a complete plan. Now, when I say complete plan, that's going to provide security of a tax-free death benefit or a financial legacy for your family if something should happen to you suddenly. Or if you live a long life, you're still going to be able to pass along a tax-free financial legacy to your heirs. If affordable protection with strong cash value accumulation potential and having the flexibility to accommodate changing financial circumstances or events is what you want, then the IUL conversion is what you need. Now, this particular insurance company that I'm going to partner you with, along with myself, that I'm going to introduce you to, this insurance company is a legal reserve insurance company. Now, this is very important when you put your money with any company, particularly an insurance company, for this particular strategy. Now, as a legal reserve insurance company, the insurance company must set aside a portion of its assets equal to reserves required by law. Annually, a financial statement is filed with each state's insurance department. These departments have authority to verify that the appropriate reserves are maintained. Now, let me just sit on this for a second, why you need to know that you are protected if this company goes belly up, if they go bankrupt. What happens to all your money, right? You don't want to lose all your money if this insurance company, if they go out of business. That's why a legal reserve insurance company is important, because they're going to protect all your money. Now, the economic challenges that we face in today's world have become second only to the Great Depression. The recent collapse of banks and large corporations in our country have made people scramble for a place that has security. We often ask, where can we place assets that protect and provide safety and security in uncertain times? One place that should be considered is life insurance companies that have a legal reserve classification. Life companies that comply with the legal reserve requirements established by the state insurance laws are known as legal reserve life insurance companies. Legal reserve companies had their strongest showing of strength during the Great Depression between 1929 and 1938, when some 9,000 banks suspended operations while 99% of all life insurance in force, which means they were approved, in force policies, continued unaffected. Many people are not aware that it was not the government that bailed out the banking industry during the Great Depression. It was the U.S. insurance companies. A large percentage of each premium dollar calculated by actuaries for each company goes into the policy owner's reserve fund. This policy reserve, legal reserve fund, is a liability to the life insurance company. The fund is established as a way of determining or measuring the assets the company must maintain in order to be able to meet its future commitments under the policies it has issued, or also known as approved. The reserve liabilities are established as financial safeguards to ensure the company will have sufficient assets to pay its claims and other commitments when they fall due. These assets are kept intact for payment of living benefits and death benefits to the insureds. The reserve pool protects annuity investors as well as those who purchase other life insurance products or policies. The legal reserve system was designed to ensure a high level of safety for each of us. It was designed to ensure that annuity and life companies have the cash when we need it. Now, how do you qualify for the IUL conversion? Now, first, you have to schedule time with me. So, next, I'm going to show you how to schedule your appointment. And when you do book your appointment, your time and date, which is going to be 2 weeks out, because I'm going to have to do my research. After you book your appointment, you're going to be automatically directed to an intake form. That intake form is going to have just basic information of who you are, what you're looking for, and how much you want to put into a IUL conversion. Now, once I get that form, and when we do meet for the first time, we're going to go over that form. And then once you're ready to move forward, you're going to do an e-application with the insurance company that I'm going to tell you about. So an e-app is next, and then after the e-app, we're going to do a telephone interview. It's going to be me, you, and the rep from the insurance company that I'll introduce you to. Now, that telephone interview is going to last maybe 30 minutes, and they're going to go over medical history. They're going to ask you specific questions, and they're easy questions, and I'll prep you because I do have a cheat sheet that I do with clients to get them prepared for that phone call. So it's not stressful. And after that telephone interview is finished, they're going to put us on a brief hold, and that's when they're going to either approve you or not approve you on the phone. So these steps are very simple. When it comes to finances, it's very simple. I do simple business and I make it easy for you. So you're going to schedule an appointment with me. You're going to do an intake form that I'm going to need from you. And then once we're ready to move forward, you're going to do an e-application. And I'm going to tell you who the insurance company is. I'm going to give you brochures. I'm going to give you everything that you need. And then after the e-application, we're going to do a telephone interview with yourself, myself, with you, myself, and a rep at the insurance company. And after that telephone interview is finished, we're going to get that approval. Okay? So that's how you qualify for this IUL conversion. All right, so we made it to the end. You can now book your IRA to IUL conversion strategy right now. Just click on the link. It should be below this video. So once you click that link, it's going to take you straight to my calendar. And then you're going to follow step 1, which is booking a time and date. And then once you book, stay on your computer, because once you confirm your time and date with me, it's going to automatically take you to that intake form. And then in the next 2 weeks, I'm going to do my research. I'm going to get prepared to meet with you. And then we're going to go over that intake form. And we're going to know, and you're going to tell me when you're ready to start. And then when you're ready to start, that's when we'll do that e-app, and we're going to do that telephone interview. It's that simple. There's nothing crazy. There's nothing sophisticated. This is a very simple process, and it makes it easier on you, and it makes it easy on myself. All right, so click on that link right now to book your IRA to IUL strategy, and I look forward to seeing you. I'm very excited to see you, and I'm very excited to introduce you and to get you a better option versus the Roth IRA that has more benefits and it has more bang for your buck.